Welcome to the Travelex Outlook for the week of May 3rd. The U.S. dollar starts the week in broadly positive territory against its European and Japanese rivals, seeing the dollar benefited by broad Eurozone weakness on doubts about a record bailout for cash-strapped Greece, while higher commodity prices combined with a chance of a rate hike in Australia on Tuesday have supported currencies in Australia, New Zealand, and Canada. This past weekend, we did see officials from the Eurozone and the IMF gathered, and they hammered out a $110 billion rescue package for debt-strapped Greece. On the one hand, that did provide the euro with some initial support on the prospect for a reduced chance of a bankruptcy in Athens. But on the other hand, we did see the euro surrender those gains on lingering concerns about Greece's ability to implement tough measures to improve its finances, particularly with such strong public opposition to the measures. Going back to last week, we did see the dollar touch on a one-year high against the euro on worries about fiscal soundness of some of the Eurozone countries. That was exacerbated by sovereign debt downgrades in Greece, Portugal, and Spain, and that fanned fears of a spreading crisis throughout Europe. The week ahead will be highlighted by a U.S. jobs report on Friday. The heavy data calendar this week also includes reports on consumer spending, the manufacturing sector, and also the housing sector. This week also features reports from central banks in Australia, as I mentioned, boosting rates to 4.5% from 4.25%. The Bank of England and the ECB also meet, though no change is expected. That's it for this week. Please be sure to visit us online for the latest breaking foreign exchange news.